So, question, if you don't have any money and you open business, it sounds like a joke, right? Because normally the general knowledge would be like, oh no, you need money to open the business. Without money, you can't make money. That's also true, but there are actually 3 ways that you can open a business without having any money. Or not much of it, but the first way is having extensive experience into something. For example, right now at my level, I could be having people saying like, Hana, I want to be in the partnership doing this and this with you. You can own 50%, 60%, and I own 40% or 50%, whatever it is, the percentage, based on the fact that I have extensive experience in running businesses and working with other businesses. And also because, I know about tax, accounting, rules, regulation, able to keep up to date with government policies, which also shape the decision that I would make in running businesses. So there are a lot of people who got like 15, 20 or 30 years experience into certain niche. Now, they don't have money to set up a business, but they can be invited into a partnership with somebody to do that certain thing, and then they can own certain amount of equities from doing it. That's the first way. The second way to do a business without money is that you're buying the businesses that allow you to pay back the vendor through retention fee. For example, an accounting firm with a value of 300k will be sold for 300k, for example. But instead of paying 300k in 1 year, people can negotiate to pay 100k each year, provided the revenue of all 3 years will be 300k each. So instead of paying 300k every single, like 300k immediately when you buy the business, you can, after 1 year performing, you pay 100k, after another year performing, you pay 100k, and after another year performing, you pay another 100k. So by doing so, the new business owner can actually like pay back the purchase price of the business gradually over the year of running that business. The third way of doing buying a business without having the full lot of money, the third way, you actually need a little bit of money, but not all. You go to the bank, you apply for a loan, but you don't have to use your personal asset as security asset. You can use the potential business that you are going to buy and use that financial reports of the business that you are going to buy to apply for the loan with the bank. For example, if you're going to buy the business for 500k, $500,000, you use the old financial report of that business, you put into you go through a business broker, you put that into an application, they go through the bank, and then the bank gonna evaluate the business. They're gonna ask your accountant to do cash flow projection or statement of assets and liabilities under your name. And then after that, if the business actually qualify as 500k through the bank valuation, you can borrow up to 80%, which is 400k to buy that business. And then in this situation, you do need to have like 100k to buy that business, but it's not the whole amount. So think about that. Those are methods that you can actually start a business